G'day everyone, welcome back to Pete's Investing. Today is May 27, 2023. This is the Bitcoin update. On our weekly trend indicator, we've got a neutral positioning. On our daily, it's showing a bearish signal. And I'll explain to you also some of these divergences that have played out and are still in play. Also on the hourly, I'll show you a bit of a back test and how to trade using the trend based on the weekly and the daily. So first off on the weekly, what we look at is this indicator down here. It's currently showing a neutral signal, but basically what that is a combination of the moving averages of the price chart, moving average 3, 5 and 60, combined with the moving average 5 and 50 of the CCI 150. If they're aligned, it shows a bearish signal or a bullish signal or a bearish signal. But at the moment, because they're not aligned, it's showing a neutral signal. So avoid taking trades to be a bit more with a high probability of success. You want to see both the weekly and the daily aligned. The daily is in a bearish trend at the moment, with both the moving averages aligned in those areas. What I've also got is some support resistance lines here and some diagonals. You can see there that the price is trending in this channel between those two descending diagonals. But also that's playing out at the moment with these divergence, and I'll explain that in a minute. Going back in a bit of history, you can see there bullish divergence on the CCI versus a bearish divergence. Now, even though the price collapsed, the way you would trade that is when the price breaks above that divergence channel there, you would have gone long there, and that would have been a nice entry to take, and you would have taken a short positioning, a trade using a long position there with a small exit. So again, you take a Fibonacci retracement from that low to that more recent high, and you would have taken a profit either between the 38 or the 50%, and that's where it broke out. And in this eventuation, it actually went higher, but I like taking small exits where they show up with that Fibonacci, the small Fibonacci range. So it would have been a small little gain. But again, I like using these as well. I don't normally trade them, but I like using these as a potential trend change, even though it might be a very short-lived trend change. So that was the first one it worked out. The other one it worked out was this little bearish divergence on this area here versus a bullish divergence. And again, you place a little channel between that range there and that low point there on that lowest candle, go short there, and that would have been a potential change of direction. You notice the CCI is still trending down, and again, you would have placed a target of Fibonacci range between that low and that high, and you would have had a target somewhere probably in that earliest range between the 38 and the 50% range. That would have been your target. Currently, we're playing out in this one as well. This is a bearish CCI versus a bullish. You can see there, if I remove that channel just to make it clearer, you would have drawn another channel for a potential, go to the lowest point there. So go short there. You can see there the CCI is trending down. That break below the channel, and you would have placed another Fibonacci range there. And because it broke there, you would have probably had it at the very least between the 23 and the 38. And it's now broken just below the 38 over here, and it may well go lower the way things are going, especially with our indicator showing a bearish signal. So again, I don't use these necessarily to trade, but I use them as primarily a short-term trend change pattern. So again, I prefer to use the weekly and daily trend indicator down here, and if they align, I trade the lower time frames based on that. What we've got on the hourly as well, I've got this back test which shows long positions only, using that same methodology, using the CCI and the moving averages of the price chart, but also combining it with the fractal breakout, the candle breaking out of the fractal in terms of entering positions when both weekly and daily and this hourly CCI with moving averages aligns. So you can see there are a number of single trades and a few average downs. We don't use stop losses, so we average down when a price goes against us, but using the same entry technique. Now, to avoid some of these average downs, again, what I do is look at the weekly and daily trend. So if you look at that position there, for example, that was June 2022. So if we go to June 2022, there are no long positions during that period, to that whole period on the weekly. There were a few potential long trades on the daily, but again, you're risking it's a lower probability of success because you want to make sure the weekly and the daily are aligned. So during this period, when there was primarily short positions on the weekly, you would have taken primarily short positions only on the daily as well. Based on the daily and the weekly aligning, you would have taken those short positions on the hourly. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page. We also do weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.